Hi everyone! Welcome back to Real Estate Answers Now. If you're new here, we're here to guide you through the ins and outs of buying, selling, and investing in real estate. Today, we're diving deep into a topic that's a crucial step for most home buyers: getting mortgage loan approval. We'll walk you through the process step by step, discuss potential obstacles, and provide a bonus tip that could save you thousands. And don't forget to hit that like button, subscribe, and turn on the bell notification so you never miss out on valuable real estate advice. 1. The basics of mortgage loan approval. Let's start with the basics. If you're thinking about buying a home, chances are you'll need a mortgage, a loan specifically designed for home purchases. The process of getting mortgage approval can seem complicated, but we're going to break it down into 5 key steps. Step 1. Pre-approval. Before you even start house hunting, you'll want to get pre-approved. This is essentially a financial okay from a lender, indicating how much they might be willing to loan you based on your income, credit score, debt-to-income ratio, and financial history. It's not a guarantee, but it does give you an estimate of your buying power and shows sellers that you're a serious buyer. What do you need to get pre-approved? Generally, you'll submit documents like pay stubs, tax returns, bank statements, and a list of any debts or assets you have. Once your lender reviews these, they'll provide you with a pre-approval letter. A common pitfall? Not shopping around. Rates can vary from lender to lender, so make sure to get pre-approved by a few different ones and compare. Step 2. The loan application. After you find your dream home and have an accepted offer, it's time to officially apply for the mortgage. This step involves completing a detailed mortgage application, which requires thorough financial documentation. The lender will dig a little deeper here, evaluating your credit history, employment status, savings, and other assets. They'll also confirm the information you provided during the pre-approval process. A quick pro tip: be as transparent as possible on your loan application. Any inaccuracies or missing information could lead to delays or even disqualification. Step 3. The loan processing. Once your application is submitted, the loan processing phase begins. Here, the lender's underwriters review your financial history and the property details to assess the risk of lending to you. They'll verify the property value through an appraisal and check the title history to ensure there are no legal issues or liens on the property. Obstacles to watch for during this phase? If the appraisal comes back lower than the agreed purchase price, this can be a hurdle. You'll need to either negotiate a lower price with the seller, pay the difference out of pocket, or find a new property. Step 4. Underwriting. Underwriting is perhaps the most critical and nerve-wracking step of the loan approval process. This is where your lender thoroughly reviews your financial situation, assessing your ability to repay the loan and ensuring that the property meets their criteria. Underwriting can take anywhere from a few days to a few weeks, depending on the complexity of your situation. Potential obstacles? If you recently changed jobs, your income fluctuates, or you have a significant amount of debt, the underwriter might ask for additional documentation to verify your financial stability. If your credit score drops or your financial situation changes, say you take on new debt, between pre-approval and underwriting, it could jeopardize your mortgage approval. Step 5. The loan approval and closing. Once underwriting gives the green light, you'll receive a clear to close, which means you're ready to finalize the mortgage and close on your home. During closing, you'll sign all the required documents, pay closing costs, and officially transfer ownership. Bonus tip: before closing, avoid making any major financial changes, like switching jobs, taking on new debt, or making big purchases, like a new car. These actions could change your debt-to-income ratio or credit score and potentially disqualify you from the mortgage. 2. Potential obstacles during the process. Now that we've covered the steps, let's dive into potential obstacles you might face and how to overcome them. Obstacle 1. Low credit score. Your credit score is one of the most significant factors in mortgage approval. A score below 620 can make getting a conventional loan more difficult. If your score is lower than ideal, take some time to pay down debt, make on-time payments, and avoid opening new lines of credit. Obstacle 2. High debt-to-income ratio, DTI. Lenders like to see a debt-to-income ratio below 43%, although 36% or lower is preferred. If your DTI is too high, Consider paying down outstanding debts or opting for a less expensive property. Obstacle 3. Job and income instability. Lenders want to see that you have a stable job history and consistent income. If you've recently changed jobs or your income varies, common for self-employed individuals, you may need to provide more documentation or a letter explaining your situation. Having an employment contract or proof of steady income over the past 2 years can be helpful. Obstacle 4. Property-specific issues. Issues with the property itself, like low appraisal values, title issues, or problems uncovered during the home inspection, can also impact your loan approval. A low appraisal value can be negotiated, and title issues can often be resolved by the seller. An inspection might uncover major repairs, but that can lead to negotiating repair costs or contingencies. And now for our bonus tip: lock in your interest rate. Mortgage interest rates can fluctuate daily. By locking in your rate as soon as you receive your pre-approval, you protect yourself against rate increases. Some lenders allow you to lock in a rate for 30 and 60 days without a fee, giving you time to find the perfect home without worrying about rates rising. If rates drop, you may be able to renegotiate for the lower rate, but it's always a good idea to have that rate lock as a safety net. So that's the mortgage loan approval process in a nutshell, starting from pre-approval to closing day, and with the potential obstacles you might encounter along the way. Remember, getting approved for a mortgage is about preparation, staying organized, and working closely with your lender to overcome any challenges. If you found this video helpful, make sure to give it a thumbs up, and don't forget to subscribe for more real estate tips and advice. Also, let us know in the comments what topic you'd like us to cover next, or if you have any questions about the mortgage process. We'd be happy to help. Thank you so much for watching, and we'll see you in the next video.